As of July 2025, momentum behind Bitcoin is not just speculation. It's a convergence of technical indicators, macroeconomic forces, institutional demand, and cultural validation from influential figures. Bitcoin is now trading around $108,669, inching toward the critical $110,000 resistance level. And the consensus among analysts, traders, and on-chain data researchers is clear. Bitcoin is primed for a breakout to new all-time highs, potentially reaching $190,000 or even $230,000. Let's break down the forces driving this conviction. One of the strongest technical signals flashing right now comes from Bollinger Bands, a volatility indicator that tracks price movement within upper and lower bands around a simple moving average. As of this week, Bitcoin's 3-day Bollinger Bands have narrowed to their tightest range in 12 months. According to YouTuber and analyst Crypto Rover, this rare compression signals that a massive price movement is imminent. The last time this happened, in February to March 2024, Bitcoin surged 75%, climbing to its previous ATH of $74,000. If this pattern repeats, Bitcoin could catapult beyond $190,000. The signal is further echoed by analyst Cantonese Cat. It notes that Bollinger Bands are tighter than at any point in over a year. And Frank Fetter, who highlighted a compressed volatility range of just 9.4%. Even John Bollinger, the creator of the Bollinger Bands, publicly posted that Bitcoin looks set for a bullish breakout. This technical compression reflects market indecision at a critical level. Historically, such setups have led to explosive breakout sand. The indicator suggests that a bullish outcome is more likely, in parallel with the Bollinger Band compression is another powerful technical structure, the Capan handle pattern. This formation, often seen as a bullish continuation signal, is playing out on high time frame charts, suggesting macro-level upside. The cup formed as Bitcoin retested previous highs and entered a sideways consolidation phase. The recent minor correction formed the handle. Now the breakout stage appears near end that could push Bitcoin's price to $230,000, according to long-term traders. As Alan from X platform noted, everything is going exactly as the bulls expected. If this breakout occurs, it won't just be a technical triumph, it will represent Bitcoin's transition from speculative asset to global financial mainstay, beyond chart patterns. On-chain metrics are also lining up in Bitcoin's favor. The MVRV ratio, market value to realized value, a key indicator of valuation, is currently at 2.23, according to data from CryptoQuant. Importantly, this is above the SMA 365 365-day simple moving average value of 2.15. Historical data shows that as long as the MVRV stays above the SMA 365, Bitcoin is in a sustainable uptrend. CryptoQuant analyst Barak Smechi stated, "History shows that as long as MVRV remains above the SMA 365, the uptrend will usually continue. Bitcoin's current uptrend remains intact." This metric not only validates the bullish narrative, it gives investors confidence that the rally is built on strong hands and long-term holders. It's not just short-term speculation. Since the approval of spot Bitcoin ETFs earlier this year, institutional demand has surged. These ETFs have made Bitcoin more accessible to retirement accounts, pension funds, corporate treasuries, and hedge funds, injecting fresh capital into the market. Recent fund flow data shows consistent inflows into Bitcoin ETFs, contributing to over $30 billion in total OM. This structural demand creates a price floor and absorbs selling pressure, especially as ETFs accumulate for their daily rebalancing needs. Some analysts believe that even long-dormant BTC wallets are now reactivating not to sell, but to move funds into more secure SegWit wallets or prepare for institutional custody. A recent report by Arkham Intelligence revealed that $8.6 billion in BTC was moved from wallets, inactive since 2011, yet none were sold. This reflects a maturing investor base. Smart money is not selling. It's positioning, no discussion about. Bitcoin's future would be complete without mentioning Elon Musk. The Tesla and SpaceX CEO, head of the United Party, recently confirmed his political movement will accept Bitcoin as part of its official payment infrastructure. When asked on X whether his party would accept Bitcoin, Musk replied, "Fiat is hopeless. So yes, this isn't just a quip." Musk's embrace of Bitcoin marks a cultural and political inflection point. His previous moves, including Tesla's $1.5 billion Bitcoin purchase and ongoing BTC holdings worth $1.26 billion, cement him as one of Bitcoin's most influential supporters. Political analyst Samson Mao suggests this could give Musk a strategic edge over Donald Trump, particularly with tech-savvy and younger voters. Proposals for SpaceX to offer BTC discounts and for a broader Bitcoin-based political economy are already being floated. The political endorsement of Bitcoin by a tech titan like Musk doesn't just boost sentiment, it legitimizes Bitcoin as a political currency of the future. July 9th marks the expiration of the tariff truce between the U.S. and several global trade partners. Investors have long feared that renewed tariffs could stall growth. However, if the U.S. postpones tariffs again, it may spark a relief rally across risk assets, including crypto. According to UBS's Global Wealth Management, a delay would signal that the government is unwilling to disrupt growth-boosting investor risk appetite, combined with seasonal post-July 4th optimism. This could drive a midsummer surge in crypto markets. Moreover, it's the upcoming Crypto Week in Washington, D.C. With landmark legislation like the Genius Act and Clarity Act, could provide regulatory clarity that further institutionalizes Bitcoin. Another powerful tailwind is the global expansion of the money supply M2. Central banks across major economies are still printing at elevated levels to manage debt loads and fund fiscal initiatives. This rising liquidity doesn't just create inflation, it fuels asset bubbles in a world of devaluing fiat currencies. Bitcoin stands out as the digital alternative to gold, with the added benefits of programmability and global transferability. Analysts suggest this macro backdrop could propel BTC to $170,000 or more in the coming months. While Bitcoin is leading the charge, the altcoin market is preparing for its own breakout. Historical patterns show that when Bitcoin dominance BTC.D hits 70%, capital often rotates into altcoins. Currently, BTC.D is at 65%, suggesting that alt season could begin soon, even before BTC hits 70%. According to Rekt Capital, this cycle might see altcoins rally earlier than expected. This means Bitcoin's rally won't be isolated. It could pull the entire crypto market upward, creating a rising tide for Ethereum, Solana, XRP, and others. Everything is aligning for Bitcoin. Technical compression Bollinger Bands, setting up for explosive price action. High time frame patterns, like the cup hand handle suggests. Long-term bullish continuation. On-chain metrics confirm investor conviction. Institutional inflows via ETFs are stabilizing and strengthening the base. Macro tailwinds, including M2. Expansion in tariff truce are fueling risk-on sentiment. Cultural validation from figures like Elon Musk adds credibility and visibility. Whether it's $190,000 or $230,000. Bitcoin's journey to a new ATH is no longer a question of if, but when. And when it happens, it won't just be a breakout on the charts, it'll be a signal that Bitcoin has arrived not just as an asset, but as a permanent fixture in the global financial order.